Hey everyone, happy Thursday, November 14th. It's about 9:30 in the morning on the West Coast, and it's time for another market update. It's been a volatile and crazy week plus. First, leading into the election, as the markets try to kind of figure out what was going to happen. And then after the election, now they're trying to figure out, how the incoming administration's policies, things like tariffs, how that will affect markets, inflation, and mortgage rates. So, not a lot of data this week, a lot of narrative. But there was some important data that came out in inflation. So, first thing we got yesterday was the October CPI inflation report. Keep in mind the Fed's favorite form of inflation is PCE, but CPI is another big report. Everybody's paying attention to it, and like I said here, that still seems to be the main issue is shelter costs. Taking a closer look, the headline number came in at plus 0.2% month over month, and the year over year is now at 2.6, up from 2.4%. The core number, which takes out food and energy costs, because the Fed, or basically, they think that the core number is a better one to look at because they think their policy has more effect on things that are in the core, whereas their policy does not affect food, production over in Ukraine or oil production in the Middle East, things like that. That some of those things are out of their control. So they like to look at the core, and the core was up 0.3% month over month, and now 3.3% year over year. Um, like I said, the shelter, which makes up 45, almost 50, 45.7, almost 50% of this core number, is still really elevated compared to real-time data. If you look at apartment lists, core logic, things that are tracking in real-time, rent data, that seems to be a lot lower than these numbers. Where the shelter, year over year is still at 4.88% inflation. That's quite a big number. And you can see here, it out of this 3.3% number year over year, 2.23% of it is shelter. This is almost all our inflation is shelter cost. And then the stuff that makes up shelter is, rent, which makes sense. Lodging away, again, which makes sense. That's hotels, things like that. And OER, which is owner's equivalent rent. This one makes up a big portion of that, 33.8% of this core number. And that is at 5.19% unchanged year over year. And like I said, it's making up 0.11% of this big jump every month. Owner's equivalent rent is basically, it doesn't make a lot of sense to me that why they would include this, but this is basically where they ask owners how much they would rent their house for if they were going to rent it. Um, Me personally, I just feel like there would be a lot of bias in that. People tend to think their things are worth more than they should be worth. So that just seems like I wouldn't want to. That doesn't seems like a biased data. I don't think I would want to include that, but it's in here, and it's a really high number, and it stays high. The other things that came out of this number, airline fares came up a little bit. Used cars year over year is down, but came up a little bit month over month. Motor vehicle insurance for the first time in a long time came down, which was nice to see because that's been up for everybody. I'm sure we've all had to deal with that. And then everything else core was up just 0.3%. So these items and shelter are basically all this inflation we're getting in core. So hopefully, we do expect this shelter number to come down to match up more with real time data, but until it does, this core number is going to stay elevated. Next thing we got was October PPI. So this is similar to CPI. This is producer inflation, so not consumer inflation, like what inflation on things we're buying, but how much is it costing these companies to produce these goods we're buying? This was up 0.2% month over month. It's now 2.4% year over year for the headline number. Core again up 0.3% and up 3.5% year over year. Maybe a little elevated again, kind of mainly in line with expectations. Maybe a little elevated. Definitely shelter, inflation stayed a little stickier than expected. So that's something the Fed's going to pay very close attention to. And with all this tariff talk, I know people are starting to, everybody was starting to focus on the job market, and now there's some focus going back towards inflation. Next thing we got initial jobless claims. So jobless claims came in at just 217,000 new claims. The estimate was about 223,000. Continuing claims are still, I think, about 1.87 million, where people are still on unemployment. So this number again a little on the lower side. So it still is kind of pointing to the job market being stronger than a lot of people expected at this point. Miscellaneous stuff. So really, like I said, a lot of this is narrative. We had a lot of Fed speakers this week, and in fact, Chairman Powell's going to speak in a few hours. That could be market moving depending on what he says. So hopefully he doesn't say anything we don't want to hear. And then but for the most part, the Fed speakers still seem like they're open to a cut at their meeting in December. So none of this data, nothing that's come out so far has changed. But again, that's why we've got to keep a close eye on things. And then, like I said, the election aftermath, the market's trying to figure out if these tariffs are going to go in effect, how that will affect things. if there is going to be mass deportations, how that will affect our economy and things like that. So there's a lot of drama narrative that's probably going to go over the next couple months as we transition into the new administration. So it's going to be volatile. So we'll just have to keep a close eye on that and try to figure out, where things are heading and how that will affect mortgage rates. So where does that leave us? Last week we are at 6.98. This week we're at 7.02. So a little bit higher. It came down a bit. It's jumped all around actually over this last week. So it's just hanging around that 7 mark, higher than we'd like to see. So hopefully we get some downward movement back towards that 6 number, which we were pushing, about a month ago. Important dates coming up. So we got in about 2 weeks, we get the next PC inflation report. Like I said, that's the Fed's favorite form of inflation. Take a look at that's going to be a big one. We get a BLS jobs report, which has been killing us. This last one was really low jobs created, but they think that had a lot to do with weather, hurricanes, and strikes and stuff. So right now the market narrative is that number was not true and it was lower than it should be. So it'll be interesting to see what the December number comes out. If it backs it up, that will be positive for us. If it comes in low again, then maybe that narrative will shift to, hey, maybe that wasn't an outlier. And then we have a CPI report again in between here, I think on the 12th of December. And then we get this Fed meeting on December 18th where they will make their next rate cut announcements. Right now, it's about 80% chance that they'll cut rates and 20% chance that they won't. We obviously want that 80% chance. Maybe if the data goes in our favor, maybe there's a chance they'll turn into a half point cut. But right now, pretty solid, either a quarter point cut or no cut at all. So like I said, not a lot of data this week, a lot of narrative, a lot of volatility, a lot of, just like in the world out there, a lot of volatility and how people are thinking, how things are going to go. So we're just going to have to keep a close eye on things. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.